Good morning and welcome to a weekly video update. On the euro dollar, we saw that pullback last week from the daily trend line, but also saw how that just above 3600, the 3630 area capped the move and it rallied back to take out the previous swing highs up in here at 3770s. It is currently right below that resistance line 3790 to 3790 to 3830 is the key resistance zone at the moment that it needs to break to follow through higher. I am still quite bullish in spite of the resistance and will retain that view as long as it continues to hold above that 3730 mark. We have horizontal support in terms of previous swing high as well as this initial trend line here on the hourly. Moving on to cable. So we had a new channel developed last week after the initial consolidation in this lower one, but the 6600 support held quite well after double testing. It rallied, broke out of that outer channel line 6670s and rallied to that 6670 resistance level, where it is just now consolidating below that level. It's not quite a triangle, but it looks like it might be working on that. So if it does develop into a triangle, then we might see something like this, sort of a triangle already. So support initially is projected down in here at 6700 and resistance between 6745 to, of course, the 6770 area. The key level after that zone is, of course, the swing high up at 6820s. It is important for that to break, for this to move on higher. If this does break to the downside, break that 6700 support, the next area below that of importance would be 6650. Now the Australian dollar has pretty much been consolidating as well, but it looks like we're seeing a failure to retrace higher, just below that previous swing high there on the daily, and it looks like it's gradually making its way back down. This is where it rallied on Friday and then failed. So it's important that that level continues to hold 89.70 to 80 resistance. It's important for that resistance to hold. Generally the bias is bearish, and although we do have, you can just see how much support is in just below where it's trading right now, 88.80, 88.80 all the way down into 8800. We've got incredible support, but generally the bias appears to be to the downside once again. On the New Zealand dollar, so we had that triangle in play on, or the widening pattern on the hourly last week. It broke out to the upside, and so this could either be a retest. This could be a retest to move higher. See, it did test that key level I mentioned, 8400, which is where the daily range resistance is. Pulled back. So now if you look at the 4 hour as well, This is our, that's that key channel resistance line, which basically determines this is our buy zone, this is our sell zone. If it closes back down, if it closes down below 83.40 and holds, then that would have been a failed breakout. So 83.40 is a key level right here. 83.50, and the support extends 83.40, 83.50. That's the zone that needs to break to suggest that this will be pushing back lower. Generally speaking, on the weekly does appear quite strong, and it looks like it could make another attempt to go higher. But as I said, 83.40 to 50 to the downside, and of course 8400 for resistance. The US dollar Canadian made double tops on the 4-hour, closed below the 110 support for bouncing back and failing again. So this looks like we will likely be seeing another down move, perhaps towards the support line coming up at 940s. Either that, or if this level where it's at right now, just above 1040, if this support holds and it sets up a triangle, then we might see a breakout move from there. But just looking at it as it is right now, it does appear to favor a move down into that 940 mark. And the dollar Swissy, we had quite a bounce there up to that 4-hour resistance line, where it failed quite nicely. We'll move right down into that support. See that line on the daily, 87.80, where it's trying to bounce from now. I think it'll hold for the time being, but I think in time it'll give way. I don't think this will hold for very long, unless of course see something significant, like a couple of reversal bars on the daily. Anything short of that will not do. It's just bearish all over. So I do believe that we might see another retracement if we pull a fib on this. Let's see, our 38.2%, 88.33, 50%, 88.50. So 88.50 lines up with the broken support here, so that's a good area to watch for new shorts. 88.50 to 60, if it retraces that far, which I doubt, but we'll see. If it does, that's the zone to watch for potentially new shorts. That covers it. Thank you for watching, and trade safely this week, guys. Bye.